Hello, hello, and welcome to Tuesday's Top Tips. It's another Tuesday. I'm really excited to be with you today. And I'm going to bring up a topic that I think, I think not just you as professionals, those who are on here who are credit professionals, financial advisors, loan officers, and real estate agents, but consumers. So consumers, listen up because I have some information for you that's really going to help you. But again, welcome to Tuesday's Top Tips. Today's topic is one of those things where every single client you have can benefit from what I'm talking about, and that's self-reporting accounts. Those are the bills that they are already paying. Rent, utilities, phone bills, insurance, things like that. And these are things that they're paying every single month, but they're not getting credit for. So they're like throwing money out the window without it actually helping their credit. But things are changing in the credit industry. And so you need to know about that. And we're going to talk a little bit more about that and what that means for you today, as well as what that's going to mean for you professionals and clients for the future. I'm also going to give you two completely free strategies that you could use today. Credit professionals, you can use it for yourself. And then also those clients can use it. Consumers, if you're listening, you can use it for yourself. Loan officers, you can use it for yourself. Real estate agents, you can use it for yourself. I'm going to give you two free ones that are going to really benefit your clients and yourself. Plus, I'm going to give you at the end some affiliate opportunities where you can benefit monetarily as you're helping your clients get self-reported things on the credit report. So stick with me. We're going to go through all of that in the next 30 minutes. So I'm going to go ahead and take you to my PowerPoint slide that I have created for you. Just a little caveat here, because I see I'm glitching every once in a while. I'm actually in Atlanta, Georgia for a really important mortgage conference. I'll be here for the next 4 days, and I'll show you around. But I literally can look out the window of my hotel room right now, and I'm looking at the Mercedes-Benz Stadium. So really, really excited. I'll show you guys inside of that tomorrow. Not tomorrow. I'll show you inside of it the following day. So what's tomorrow? Wednesday. I'm going to show it to you on Thursday and Friday. And actually on Thursday night will be the Little John concert. So I'll show you inside that concert as well. So that'll be a fun time. But let's go ahead and jump into this content. Self-reported accounts, build credit with your bills that you already pay. Let's dive into that. All right, so here's what we have. I'm going to give you a 30-minute roadmap of what we're going to talk about over the next 30 minutes, so you know exactly what we're going to be doing. So this slide is important because I want you to look carefully, because not all scoring models are the same. So we're going to talk about that. So why is it important? That's one thing we're going to talk about. Why is it important now? And a lot of that has to do with Vantage 4.0 and FICO 10T has changed everything. Plus the classic FICO and FICO 8 and what that means to your clients and your mortgage clients, those who are trying to apply for a home. Number two, we're going to talk about the financial health first strategy, why self-reported accounts strengthen your credit profile even if they don't impact your score yet. We'll talk what I mean by yet. And for two strategies, I'll give you a free strategy, number one, with Experian Boost, and the self-reported strategy from self. So we'll talk about that. And the middle score strategy, what lenders look at in terms of the middle score, and the full landscape of action plan. So all of that in this 30 minutes that we're going to go over. And I'm going to play with my screen real fast because I feel like that my screen for what you guys see is too small. So I'm going to make me smaller here so you can see my screen here, and I'll kind of go back and forth. But this is what we're going to go over in the next 30 minutes. A couple of things that I did want to mention to you in terms of this landscape that we're going to go over. First of all, is that there are several things that we have to go over. Not everything's going to work exactly the same depending on the model of either FICO Advantage that's being used for the consumer. So we are going to deep dive into that. So please follow me, because if you don't follow the entire 30 minutes, you may miss out on important details that are going to be important if you're going to be talking to your clients about this. Okay, so follow me to the end. All right. So why is it important right now? This is a really important slide here that I want to go over with you. We have the classic FICO. Now, the classic FICO is what most people remember when they go apply for a mortgage, and it is still the dominant mortgage score. So we have started using, Vantage 4.0 in the portfolio products, the FICO 10T, the very, very small amount. It's in a very early stages, something what we call like beta stages. Okay, but the classic FICO is still the dominant. That is FICO 2, FICO 4, and FICO 5. So when I refer to classic FICO, that's what I'm referring to, and that's what's being used in the mortgage industry. So those of you who do not know, FICO 2 is from Experian. FICO 4 is from TransUnion, and then FICO 5 is your Equifax report. So that's what those numbers indicate. And these three scores are used in the mortgage industry, and we use a tri-merge credit report. We'll talk more about that. They do not factor in rent and utility payments. That is important for you to know. So if you work with mortgage clients and they're going to get a mortgage and the loan officer is using classic FICO, which most likely that will be the case because it is the dominant model, note that when you add self-reported accounts, it does not improve that classic FICO score, although it is a financial health marker. We'll jump into that. Now, FICO 8 is in general lending. So this is widely used for, auto, credit cards, personal loans, things like that. It does ignore rent trade lines, but it does have, if you're using Experian Boost, you will see that. This is not used widely at all with mortgage lending, okay? And then you have FICO 9, and that's a newer general lending score as well. It does consider rent if it's reported, but not many people use FICO 9. So you can't really, we're not going to talk much about FICO 9 because I think once FICO 10T comes out, FICO 9 is going to be irrelevant anyway. And then Vantage 4.0, well, let's go back to FICO 10T. So FICO 10T does give full rent, trended payment history is included, and rewards consistent payments. And this is growing adoption. We do believe that we're going to see more widespread use of this as it enters the mortgage market late 2026 and continue through 2027. Vantage 4.0, though, has entered the mortgage market more widespread. It is in that beta. There's guardrails on it, and there's a lot of limitations with it. Those of you who may have seen my class, if you didn't, you can still buy the replay of that class with all the assets I give you, cheat sheets, everything you can imagine you'll get with that. Those who have seen that, you will be able to get information about that class. That it's $199 for that class, but it has all the information you can imagine about the new shift in the credit. So I highly recommend that class for all of us. So those are some of the key things I wanted you to know. So Vantage, though, that is the one obviously that we're hearing about that some mortgage companies are using. And this one fully weights rent and reoccurring bill history. This is important. And this is a major model mandate that has just happened. And so we're going to see this as a widespread addition to the mortgage industry, which we'll call dual reporting. So we'll have the FICO and the Vantage 4.0, and then the lender gets to choose between those two moving forward. Of course, that's not widespread yet. And then finally, I want to go over a little bit on this screen here. The Fannie Mae and Freddie Mac are now required to accept Vantage 4.0. Again, this counts rent history among other things. That's really important. But important thing for you to know is not all mortgage lenders are using this version of Vantage yet, or any Vantage. It is in the early stages. Adoption will grow, but classic FICO, which you need to know about, still dominates the mortgage underwriting today. So why does this matter today? If I'm a lender and I'm using classic FICO because that's the dominant, why do we care about self-reported credit when it doesn't improve the credit score? Because we can start building history now. When lenders do adopt the Vantage 4.0 and FICO 10T, remember those models are looking at a 24-month history. So why don't we start adding that now? So when it converts, we will have 24-month history with those self-reported accounts on the credit report. I think it's really important. Now, we do know FICO 9 and Vantage 3.0 already count rent. Some lenders do use them. I don't know any personally that use them, but it is said that there are some. Profile depth matters in manual underwriting regardless of model. So depth of file is really important. So even still today, even though rent does not help improve the classic FICO credit score and utilities do not, what we do know, which is really important, is it creates depth of credit file. So it's really good for someone who has no credit. We're building what we call in the mortgage industry non-traditional trade lines. And so self-reported accounts, I call them the financial health markers. So we'll talk a little bit more about that as well. All right, so credit history is bigger than the score, okay? The credit profile tells the full story. The score is just the headline. I've been trying to beat this into everybody's heads as I coach people on credit, is that the score, we like to talk about score. I want a 750 score. I can show you time and time again where I've had a client have a 750 score and not be able to purchase a home. So I'm going to beat this into your head. Credit profile tells a story, and it's going to be more so in the new scoring models when we go into FICO 10T and Vantage 4.0. But know that it already is today. But what's happening when we go to Vantage 4.0 and FICO 10T is that it's going to be on the credit report. It's going to be part of the profile of the score where it wasn't before. But know that lenders have always looked at the complete profile. So lenders, landlords, and employers look beyond the score. That's been we've been doing that forever. A robust file with consistent payment history signals reliability, even when those trade lines don't affect the FICO, the classic FICO. Okay, so even or FICO 8. So even though they don't affect the score, that profile is still looked at very heavily. So important to add those self-reported trade lines today. Okay. Now, years and years ago, a little quick story, we used to add Experian Boost to someone's credit profile. And the funny thing about that is when that first came out, mortgage lenders didn't understand it. So they were adding it into a consumer's debt to income ratios. And so then we would have to remove the Experian Boost, which is actually really easy to do. But we know today that that's not a part of the debt to income ratio. So that's not been a problem for a very long time. But I remember a very short period of time that was a problem. But that is not a problem. It does not affect your debt to income ratio. So I think that's important for all of us to know that. Future proofing. The industry is moving towards FICO 10T and Vantage 4.0. We already know that it's already starting. Every month of history you build now is retroactively valuable to you. So when lenders do upgrade to these models, you already have that history there. And of course, you know that they're looking at a 24-month history. In mortgage underwriting, so there's manual underwriting reviews, mortgage reviews of files, and we look for those alternative trade lines, which we also call non-traditional trade lines. So 2 years of on-time rent creates a stronger narrative, especially with classic FICO, when those don't even count as a score. So really important to be adding those now. I'm just giving you some examples of why it's important. Multiple score environments. Some lenders already use FICO 9 versus Vantage 3.0 and Vantage 4.0, and those are already showing score improvements with the rent and other things on the credit report. So again, it's something you can do right now today that's going to help you regardless of what FICO model is being used. Okay, so I just want to make sure that I said that out loud because I think it's really important that we all know that. Okay. All right, so I am going to go into your first free strategy. This is for consumers. This is for credit professionals. And this is called Experian Boost. So I'm going to go to this as well. Let me go back to my little guy here. I'm going to play with one more. I'm going to try this one and see if this one's better. Okay. So Experian Boost is a free resource. This is something you should have all of your clients doing today. And I'm going to give you the affiliate opportunity because you can make a little bit of money off of this Experian Boost, even though it's something that's offered to the consumer completely for free. So it does report utilities and bills on the credit report, as well as it may find rent, it may find cell phone bills, things like that. So what it does is it links to a person's bank account. Now I guess the caveat here is that Experian Boost doesn't have all of the banks. So your major banks would show up on Experian Boost, but it will link to your bank account. Experian scans for bills and adds them to the Experian credit profile, and it's instant. So today, if you do it right now, you will see that instant score improvement on your FICO Score 8, as well as the Vantage 4.0 and Vantage 3.0. Okay, and it's free and it's reversible anytime. So if you decide you don't want it on the credit report, you could go into your Experian Boost, Experian.com profile, and you can turn it off. So you could do that. So I think that's important for you to know. The other thing that I want you to know is it only reports positive payments. So it looks for 3 consecutive months of on-time payments to a cell phone, to an auto insurance, whatever that might be. So you'll see some eligible payments for Experian Boost is electric, gas, water, internet, phone bill, and there's mobile and landline. I don't know how many people have a landline. So streaming services like your Netflix, your Hulu, your Disney, not all self-reported things do those streaming services. Insurance, home, auto, life, and rent payments can be found. So if you're paying it through your bank account and it's in your name, those can show up on your Experian Boost. Okay. So this QR code will give you some more information. But let me just again go back to the limitations here. It only affects the Experian score. Okay. Equifax and TransUnion are not impacted by this self-reporting with Experian Boost. Okay. But I'm going to tell you again why it's important. Number one, it's free and it will boost up Experian. And I'm going to show you another free strategy that's going to do something as well, and the combination of the two and what that looks like for you. Okay. So this is Experian Boost. We're going to move on. I'm going to show you our other strategy, which is Self. So I don't know if you guys are familiar with Self, but it has rent reporting to all 3 credit bureaus for free. And it also only reports positive payments. So if you have a missed rent reporting, it will not report that. It does report to all 3. So it will report to Experian, it will report to Equifax, and it will report to TransUnion. And in another slide, I'm going to tell you why that's important. There's no credit check required and no landlord needed. So this one's a really cool thing for each and every one of you. You are renting and you're paying that rent on time. You should go ahead and add this for positive rent. It's free. Okay. Now you can upgrade for $6.95 to add utility bill reporting to your credit report as well. Okay. Important note, it only reports those utility reports to TransUnion. Okay. So what you have here is you have rent reporting for free to all 3. You can have TransUnion utilities reported, but there's a fee, not a huge fee. Experian Boost is free. So now you have 2 of the scores that have been improved from utility reporting and rent reporting already. So that's important. So keep that in mind because I'm going to talk more about that. And then for $49.95, you have a one-time look back. So it can add up to, check this out, 24 months of past rent. That's important because remember we talked about that Vantage 4.0 and FICO 10T, they're looking back 24 months, right? So you pay that one time and they'll go back. This one though, landlord verification is required. Okay. I hope that makes sense. So again, on both of this, we talked about Experian Boost. It only reports positive payments. Also Self only reports positive payments. I'm going to show you some that actually report negative. So you have to know what you're doing and what you're having a client do. It's really, really important, but this is Self. And I'm going to move on to I want to make sure I have some notes here and I don't want to miss anything. I think I really went through that pretty well. Okay, so the middle score strategy, that's the next thing that I want to go over with you. Make sure that I'm on. There we go, my notes for that. So middle score strategy. Now this is where it's really important. So when we're looking at the middle score strategy, mortgage lenders pull scores from all 3 credit bureaus. When we're looking to approve you for a home loan, we're going to look at all 3 credit bureaus and we use the middle score for qualifying. So improving 2 of the 3 bureau scores will likely move 1 to the middle score. Okay, that's why if we do Experian Boost, it boosts Experian. If we do Self and it just does TransUnion, now we have 2 scores that have been boosted. The one that falls in the middle, we may be very, very lucky that one of those that we boosted would be in the middle score, right? And so Experian Boost is, or experience is covered by Experian Boost, completely free. Average point improvement for Experian Boost users is 13 points. Now, I have seen where I've had clients and they report back to me and we have 30-point improvement. So 13 points is the average. Equifax is covered by the self-reporting rent, right? Because the free self-reported rent reports to all 3 credit bureaus. And then TransUnion can be covered by the self-reporting rent. Obviously, Experian and Equifax do too. But if you wanted that self-premium, which has a small fee, then you can have utilities reported to TransUnion. That would be my recommendation. That's what I call the middle score strategy, because this combination works really well for mortgages. So if you are applying for a mortgage and you know for sure that they are going to pull Advantage 4.0, this is the middle score strategy I want you to do before you apply. Okay, remember Experian Boost is instantaneous, right? So here's a quick trick for a lot of you. It does improve the FICO 8 credit score. We know that. It does improve the Vantage 4.0. But if you're going to go get a personal loan, maybe you talk to the bank and say, what score are you pulling? Because most banks with personal loans only pull 1 score. So if they pull Experian and you have Experian Boost, you might get better terms with that loan. So again, just some key takeaways. Experian Boost targets Experian, self-targets Equifax plus TransUnion plus Experian, right? Together, they cover all 3 bureaus for $0. Again, we can have utilities for TransUnion, which I would recommend, especially if you're going to go apply for a home loan, especially if you're using Vantage 4.0. And that would be a little bit of a cost, but that would get TransUnion covered with the utilities as well. Okay, because when a mortgage lender pulls a tri-merge and uses the middle score for qualifying, we want to improve 2 of the 3 scores, and this will increase our probability that we'll have a higher qualified middle score, which can make all the difference for your mortgage rate and your approval, right? So we all know scores have a lot to do with the determination of what your rate's going to be and whether or not you get approved, right? So just know that. Hopefully that helps. That's what I call my middle score strategy. Again, if you're using classic FICO, you still do this model. Why? Because we're looking at the complete profile and we can get ahead of the game before lenders convert to Vantage 4.0 and FICO 10T as a widespread mortgage scoring. Okay, so Experian Boost plus self equals complete coverage. We just talked about that. I'm just going to say that again. So we got Experian Boost, free forever, positive payments only. I'm going to give you an affiliate link so you can be able to get some money by having your clients do that. You should have every single client do it. Instant setup, right? Self-reporting all 3 bureaus for rent, no landlord needed, free forever. You can upgrade for the utilities for that $6.95. Again, only reports positive payments, and you may make a little bit of money off of self. Together, we get all 3 covered. We got Experian, Equifax, TransUnion, and $0 to client, positive only reporting, middle score advantage. You can't lose, right? So I missed one of my slides. That's really important. But I want to talk to you about some other services. Someone just messaged me the other day, and this is the reason we're doing Tuesday Top Tips. The way that we're doing it is someone messaged me the other day and said, hey, what are all the self-reported type places that we can send our clients? So I wanted to go over a few of them with you because they're not all equal. And some of them you may want to consider and some of you may not. So we'll talk about that. So the first one I'll talk about is Boom. Boom is free for ongoing reporting. It reports to all 3 credit bureaus. This is for rent reporting and phone payments. So Boom is free for rent reporting and phone payments and accepts Vimeo, Zelle, and Cash App as verification of your rent payments. That's pretty cool. I know a lot of people who tell me they use Cash App for paying rent. So this is really, really cool. So clients who pay their landlord through an app can still get credit. Past rent look back is 24 months. You can do a 24-month past look back on your rent for just a one-time $25 fee. No landlord required. Boom is a solid option, especially for clients who pay rent informally and and it only reports positive reporting, right? So if you've missed a rent payment, it's not going to show any negative reporting. Really, 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 really good one if your clients are paying through some kind of app for the rent, okay? Next, we have Pinata. Pinata is a $5 a month. It has a reward model. So those may be clients who like rewards. It's a one-time rent, earns points, redeemable for gift cards, reports to all 3 bureaus, includes a look back, and positive only reporting. Good for clients who want an incentive on top of credit building. So that's Pinata. Then we have level credit. Level credit is now part of the self ecosystem. It reports subscriptions like Netflix and Spotify alongside rent. It's the broadest bill variety of any service. It does report only positive reporting. Rent goes to all three bureaus. Utilities and phones only go to TransUnion. And remember, that's level credit was level credit, and now is known as self. Okay. And then we have rent reporters. So this is one, listen up. This one's important. Rent reporters. Rent reporters has the longest look back, 48 months. Now that's great, but remember, mortgage lenders in this new scoring model, we're looking back 24 months. Does 48 months make it even better as far as a profile look back? Sure. But is it necessary? Probably not. We do want the 24 month. But if you do want 48 months look back, this is really important. Rent reporters report both positive and negative. Both positive and negative. So if you are late, then that's not going to be a good option for you if you are going late. So rent reporters only if you're continuously and always paying your rent on time. It will report late. So I do not recommend this to any client who is not fully current on rent. And this one does require landlord verification. So it's a little bit harder anyway. Not my favorite. It's kind of expensive too. Okay. Then we have Stellarfy. And Stellarfy, where's my notes on this? So Stellarfy is interesting because it reports your bills as a line of credit. Now, this is really important because it reports your non-traditional trade lines as a line of credit. This one will or possibly could affect the debt to income ratios for your client. So this one you got to be careful with this one. This means it influences all FICO and Vantage score models, including FICO 8, including classic FICO. So if you're trying to improve the classic FICO and the FICO 8, Stellarfy is a great option because it's going to report like a line of credit, like a credit card. Okay. So let's see what else I would tell you about that one. It starts at $5 a month, reports to Experian and Equifax, so it does not report to TransUnion. That's important. If you have a client who specifically needs to move their FICO 8 score and they have a strong bill payment history, Stellarfy is worth the look. Okay. And again, it could be factored in as part of the debt to income ratio. So that's, I think, an important point for you to know. And then the last one that I wanted to talk about is eCredible Lift. Okay. eCredible accepts the widest variety of bill types, including insurance. It's $9.95 a month. Yeah, that's right. $9.95 a month. And it does only TransUnion. So again, we have a lot of alternatives that are free. And or like remember, self was $6.95. But it does have the widest variety of bills, including insurance. Remember, self doesn't report insurance, but Experian Boost does, right? So we have a lot of advantages to different services. And because of the change in the industry, what do you think may happen in the near future? I'm curious if anybody has an idea of what you think might happen in the near future. There's probably going to be more. So there probably are more companies coming out with these self-reported type things. I would probably venture to say there's going to be maybe even higher fees for these things because they are going to be important for people's mortgage files. I think that's something that we're going to see. What else would I say about that? I think we're going to see a widespread adoption of reporting both positive and negative. I think that may even be something that happens and or that different utility companies start reporting. I'm really curious to how this model is going to go. There's always, when there's a positive, there's always a negative, right? I always look to see what might be coming down that pike. So just know that we could see some other changes in our industry from that. Okay, I'm going to move on because I'm running late. I told you 30 minutes and I'm running late, but we are almost done. So critical considerations for you and your clients. Once you do add one of these types of services, it is important within 30 to 60 days to check the credit report and make sure that they are reporting on the credit report, right? I recommend positive only reporting and not have companies, unless you know for sure you're not going negative, like rent reporters, right? So positive reporting only. Classic FICO and FICO 8 still dominates. Well, Classic FICO still dominates the mortgage industry. FICO 8 still dominates the general lending industry. So know that these will not improve those scores. But again, like I said earlier, they help the profile. So still very, very important. Here's a really important thing. Bills must be in the client's name, especially when we're talking about Experian Boost, because it's going to grab that bank account information and bring that in. Okay. So if they're paying the bills, or maybe the landlord's paying the bills, or they have someone else's name on the thing, and you get the point. It has to be in the client's named account. FICO score model used matters. So FICO 8 and Classic FICO largely ignore rent. FICO 9, FICO 10T. I don't think I have to tell you that. So always ask the lender which model, so you know which one does. Okay. All right. Let's see what we have. Clients can run Experian Boost and Self simultaneously. I think this is important. I want to make sure I let you know. So this is what we call stacking. It is allowed, and we actually recommend it. So don't worry about having multiple different services that would self-report. And I do obviously highly recommend that you add Experian and Self as part of the strategy. Okay, so this is just some critical things to think about. So what to do this week? I'm going to go big on this and take myself off of this, because I want you to see the full image of this slide. So I have some roadmaps, or whatever you want to call it, step by step, what you could do this week. Okay. Step number 1, get on Experian Boost. Again, it's a free account. Link your bank account, verifies bills, done in 5 minutes. I will give you the Upsell Nation, there's a typo in there, Upsell Nation affiliate link here at the end of this live, and we'll have it in the guide. So those of you who are professionals, if you comment Boost below, we will get you the guide. I've created a special guide for you on how to use self-reported accounts. But then step 2 is set up your self-report rent reporting. So if you are paying rent, again, that's a free account, so do that. And then step number 3, I recommend that upgrade on Self, the 695 upgrade. I highly recommend that, especially if you're getting lending right away. In step number 4, consider the look back. Remember that we're looking at 24-month history. And so client who has 1 to 2 years of rent history and they get that on their credit report, it really does make that then file stronger, even for the mortgage, even if we're not counting it in the score. Remember that. Okay. In step 5, verify and monitor pool reports at annualcreditreport.com, or if you are fortunate enough to have credit monitoring with your clients, even better, just constantly looking at confirmed trade lines are showing, and really fun, document the before and after movement. I think that'd be a lot of fun to see what happens with your credit scores. Okay, so that is your what to do this week. 5 steps to do this week. Okay, so I'm going to show you some different ways that you can share these resources and make some affiliate income along the way. So we have 2 different ones that I'm going to share with you, and that is Experian Boost. That's from Upsell Nation. Sorry about the typo, Upsell Nation. You can get your unique affiliate link for Experian Boost and share it with your clients. The client still pays nothing, still free, but you can earn some commission off that. And then we have the self rent reporting affiliate link. You can do that as well. So I'm going to share those affiliate links with you here in just a moment. If you get the guide, you say Boost, we'll send you the guide and you'll get to learn more about those as well. Okay. So every client should be on these 2, right? Experian Boost, every client. Self, if they are paying rent, they should be on that. Okay. All right. Wrapping up here, here is the Upsell Nation QR code. So if you are available to scan that, you can scan that. Again, those that are professionals, you can send me or say Boost below, and we'll send that to you, the guide, the complete guide. And then we have the self affiliate link. So go ahead and scan that. Again, if you want the guide, comment Boost below, and we will get you the complete guide on how to use this. Stick with me because I have something else that I want to share with you that's really important for next Tuesday's top tip, and a special class we're going to do next week. So I'll talk about that. So stick with me. The last one though, if you found value in the Tuesday top tips, I want to know. I want to know if I should continue to do these Tuesday top tips. I also would love to know what you want me to talk about. So if there's something that's on your mind or something you're struggling with in your business, you can comment or you can do a private DM to me. I'd love to know and make that a part of the Tuesday top tips. So oftentimes what happens with Tuesday top tips is someone will ask me a question and it will trigger an idea like, hey, let's make this a complete class for everyone to see. And so that's what I'm offering on that. So that's a QR code for that. Now, let me tell you about what's happening next week. So some of you guys know the YouTube gurus, Dave Cousins and Michael Drake. They are going to be joining me at Tuesday Top Tips next week. So 12 noon Tuesday Top Tips. We're going to kind of do an interview style Tuesday Top Tips talking about posting, right? So if you are a professional and you're trying to get the nuggets of information of how to post and get traffic and get clients from post, they are the gurus of that. Some of you guys may know them. They are what I call the YouTube gurus. So that's going to be, they're going to be on the Tuesday Top Tip. We're going to be talking about that, but then we're going to do a full class next Friday, not this Friday, but the following week. I believe that falls on, I put a note for myself, the 12th. So mark your calendars. That's going to be from 5 p.m. Eastern time to 6 p.m. Eastern time. So we're going to get an hour with them. And the title of the class, I have my notes here that they text me. The title of the class is $1 Million Posting Secrets, How to Turn Free Social Media Posts into $1 million. And they've done it over and over and over again. So if you want that, that's a free class, by the way. They also have a really cool guide that you guys will get at the end of that class. So I'm super, super excited for next week with Dave Cousins and Michael Drake. Those of you who know them, maybe put a message down below. Like, I can't wait to see them so that they can see that too, that you guys are curious and want to learn more. So maybe you do $1 Million Secrets. Val, let's comment that, $1 Million Secrets, and get them all fired up to be on Tuesday's Top Tips and then teach that hour-long class next Thursday with me, or next Friday with me. So not this week, next week, guys. Okay, so the 9th, I believe, is Tuesday. That's the 12 noon, Tuesday Top Tips, and then Friday, 5 p.m. Eastern time. So please make sure you mark your calendars because you don't want to miss that. But drop a comment, $1 Million Post, so that Michael Drake and Dave Cousins can see that you actually want to see them. I think that would be really cool. But I appreciate you all. Thank you for being here for Tuesday Top Tips. I went over. I don't usually do that, but I appreciate you. And I hope this inspired you to help your clients get on the self-reporting. This is, again, for today and for tomorrow. It's going to benefit all models. I appreciate you all. Have an amazing